Hey folks, Dan Bird here with the Daily Scan for Monday, September the 15th. Hope everyone had a very nice weekend. This is Fed week and also options expiration week. And hopefully I'll have a max pain report tomorrow and we'll see what that implies. But I can just tell you based on how that works, since we've been going up lately, then max pain is going to likely indicate that we may head lower by the end of the week. Talk about that a little bit later. I'm not a financial advisor, so this is for educational purposes only. Let's take a look and see what the market's doing right now. It is 11:15 a.m. on the East Coast. So we'll take a look and see what the 10-minute charts are looking like. And you'll see that we've had a nice little run up today. So a little gap up, still moving higher at midday. We'll see how it closes. Money flow is sort of not too impressive, frankly. So money flow is not telling us too much, but technology is flat, financials pretty much flat. Discretionary is up big time. That's probably due to Tesla primarily. Communications is also up. We'll look at all of the Mag 7 stocks today. And industrials are down, but overall looks like the aggressive sectors are what's leading on the defensive side. Healthcare down, staples down, energy down, utilities up slightly, call it flat, materials down. So defensives are down. So that's all very bullish for the market. Rotation, growth versus value is up. Discretionary versus staples is up. Technology flat, semis flat, but internet is up as well. So that looks very bullish too. And how do we look for the Russell 2000? So it's kind of like jumping around right now. It's up a little bit off the open, but look at money flow. Money flow isn't too impressive right now. I've got something to say about this in a minute, which I think is really interesting. But large cap versus, this is growth versus value. Large cap is up, mid cap is up, and small cap is up. So that is positive. That is bullish. Growth versus value is outperforming in all of those asset classes. And then finally, the NASDAQ, of course, is basically consolidating after a nice gap higher. But again, the advancers versus decliners are not that impressive. And up volume versus down volume, while it is positive, it is not that impressive. Certainly not as impressive as it was last Thursday, right in here. So we'll see how things end the day. But right now it's bullish, so might as well go with it. The Fed report is on Wednesday, so likely the market is going to tread water, I would think, from the rest next couple of days until the Fed meeting. And then the Fed will cut. I actually have the projection 96% chance of a cut on Wednesday, so that's a 25 basis point cut, not 50. Another 25 in October, 85%, and then another one in December. It's kind of split between December and January, but leaning towards December. So that's 3 cuts now for the rest of this year. And then next year, we've got 1, 2, another 3 cuts for next year. So 6 cuts between now and the end of next year. But clearly, very, very likely, I don't think there's any doubt the Fed's going to cut. I think that's already baked in. Most likely, the move that we've already seen is already expecting that rate cut. So that's why it potentially could start to go down, kind of buy the rumor, sell the news kind of thing. So it could actually go down once the Fed meeting is finished, most importantly, depending on what Powell says in that meeting. So that's what that looks like. Let's go take a look at the market carpet for today. And you can see Google, Tesla up 6.7%. Big move on Tesla, big move on Google. Meta's up as well, so that's why communication services is up. NVIDIA down slightly, so technology has been flat. Microsoft and Apple's up slightly, but not much. Oracle's still moving higher. I pulled back a little bit, but now moving back up. And Broadcom, Palantir is negative as well. Broadcom is pretty much flat. So that's what the market carpet looks like. You can see industrials is primarily green. Staples has a lot of red. Healthcare has most of the red. Eli Lilly is down, AbbVie is down, Berkshire Hathaway down a little bit today as well. So the top stocks are Seagate, Tesla, of course, second one, Western Digital, Tapestry, Intel is in there too. So let's take a look at the relative rotation, and I'll do this on a daily, keep it 1 year, and let's look at the, like we did last week, we'll look at the sectors. In this particular case, let's put an arrow and let's make this, let's give it 10, make the tail 10 long. So if we move it back a little bit, this is back to middle of July. And let's see how I want to do this. Make it look like that. There's middle of July, just move it forward. There's August. You can see technology is moving up. Everything else is going down. There's August 15th, a month ago, August 22nd, August 29th, September 5th. Now you can see discretionary moving up and communication services is moving up. Everything else is still on the right-hand side. Then last week, technology still in the leading, but moving lower. Now discretionary and communications are catching up. And then today you can see those two are definitely catching up. This was still moving lower, but it's on the right-hand side. So its relative strength is stronger than the S&P. And all of the other defensive sectors are moving to the left. This is very bullish. So everything still looks extremely bullish today. All right, let's real quick take a look at one short squeeze we have for the day. That's this one. Looks really good. Right now it's at the top of its range. Watch to see what happens by the end of the day. If you're interested in getting in on one of these are very risky. So it's up to you how you want to play it. I'm not recommending one way or the other. I'm just saying that this has more than 20% of its float short, and it has huge volume today. Let's look at it going back a little bit. So there's the huge volume. This right here is where shorts were coming in. So this is where this level right here is where shorts are feeling pain. So that's why they're covering. They'll start to feel pain again when it gets up here to this level, around $9, $9.50, and certainly when it gets over 10. Right now it's at 670. So we'll see if that short squeeze can continue. It's above the clouds, below the 200, however. But this one could continue. I don't know what the news is or why. It's in medical supplies, RCEL. So keep an eye on that one. Let's real quick take a look at the short squeeze list, and let's see how much of the float is short on this one, RCEL. And let's see, these are updated every week. So I updated this over the weekend. RCEL, sorry. Right here, 21, almost 22% of the float is short. Not huge, but certainly enough to cause a short squeeze. So that's the short squeeze alert for today. One other one that somebody wanted me to look at was Lululemon on the short term. Lulu has just been continuously heading down, just really a ugly looking chart. Look at this on a 1 year basis. You can see right there, went down, tried to make a recovery up to the 200. Big, huge gap down. I think that was earnings. The next earnings it was last week, gap down again. So what happens after earnings? Gap down, continues to go lower. Comes back to the 21, rejected, goes back down, comes back to the 21. Earnings again, goes down. After earnings, it typically continues its fall. So from a short-term basis, I would say very risky to get in here. Certainly not a momentum stock, unless you like momentum to the downside. If you're trying to find a bottom and catch a bottom on one of these, this is like catching a falling knife. So it's really up to you how you want to play it. Let's look at a closer in look right there. So you can see it's continuing to go down. It's not showing any signs of moving back up yet. The MACD went below zero way back here. So this first one after earnings was the big warning sign. It's continuing. It's still below zero, so it's confirming a downtrend. There's nothing really about this that says, other than it is at an extreme on the ATR. So it could get a quick bounce back up to the 21. 21 is at 184. We're currently at 160. So there's potentially 24 points right there. So if you wanted to play it that way, I am not recommending it, but you certainly could try that. If you got in right now at 160 roughly, the low of the day is 159. That's not much room to place a stop, but you could put a stop at 155 or 150, let's say. That's 10 points if you want to, if it continues to go lower. The volume today is kind of weak, but we're only halfway through. A little weak volume through here. So volume, I don't know, volume's still pretty much, I'd say, with the same as the average. So this could continue to go lower. So anyway, that's my opinion. Take it for what you want. It's a very risky play to try to catch it right here, but it certainly could make a quick bounce back to the 21 before heading lower again. All right. Finally, somebody asked about could the market sell off after the rate cut? I just said that is certainly a possibility. However, we have been strong in September, unlike what September usually is. There's been a lot of positive catalysts. We had a weak jobs number. The market didn't care. We had a stronger inflation report. The market didn't care, just kept going higher. This market wants to just continue to go higher. And if we look here over on the market bias matrix page, by the way, something new I added to this page is down here is the market bias, which is all of these asset classes on the left, indexes, sectors, industry groups, intermarket relationships, commodities, metals, and currencies on a short-term, medium-term, and long-term basis. And these tell you whether what percentage bullish. All of them are green. 80% of the whole thing is bullish. That is very rare. It by definition cannot get to 100% because some of these are opposite each other, some of these components. So it can't get to 100%, but 80% is really, really high. And we've got 84% short-term, 73% long-term, medium-term, 84% long-term. So extremely bullish market. You can see over here, the orange is the short-term, gray is the medium, and yellow is the long-term. Here's the halfway point right down here. So that's where we went down in February to April. What I did, and this is a chart of the whole thing. So this is basically a market, and it's been very accurate. But interestingly, what I did was I put a chart of the S&P right above it. So you can see right here where it started to go down. This is in February, right here where this started to roll over. That was just about the beginning of March when it went down to the low. And then we went to a low here and started to come back up and went back down just like it did here. This is the 21-day moving average, by the way. So pull back to the 21 right there, pull back to the 21 right here, but the market bias didn't really come down that far. And now, even though the S&P is much higher, the market bias matrix has not regained its high. The high was almost 90% back here. It has not got back to the high, but it is starting to move back up again. So to me, this says while the S&P has been really strong, it's based on just a few large names, and I've talked about that before. Now let's look at up here are the charts for each of these. And on each of these charts, I have two things I've added to this. One is the expected move. So expected move to the upside is 66.73. This is as of Friday, based on this Friday's options expiration, which is this vertical line here. The downside expected move is 64.95, but you can see it's continuing to move up. The gamma flip line, which I talked about last week, and I'm just beginning to study this. Gamma flip line, it's above, it's positive right now. So it's positive gamma on the S&P. That means that market makers will typically buy the dips and sell the rallies. So we're in a rally right now. At some point, they may sell it. Now, the call wall on Friday was 6,600, but we're at 6,612 right now. So we're right at the point where market makers may start to sell. We're in options expiration week. The max pain is likely going to show a decline. There's lots of reasons why this could head back down. Interestingly, expected move is right at the 21, and the flip line is right at the 50. Now, if it goes below the flip line, then market makers do the reverse. Instead of buying the dip, they will sell the dip. Instead of selling the rally, they will sell the rally. I mean, they will buy the rally. So it provides a lot more volatility either direction. Now, the really interesting thing to me, and I want to again specify that I'm just beginning to to study this. So I want to see what's going to happen right here with the Russell 2000. The Russell 2000 theoretically should benefit from rate cuts. Now, a lot of that is probably already priced in back through here. However, look at where the gamma flip line is right now. It's actually at 236, and we are at 239. So if this starts to come down and actually goes below the flip line, then, like I said, theoretically, market makers will start to, instead of buying the dip, they will start to sell the dip. So this could head lower very quickly. However, on the other side, if this happens to go below that 236 level, by the time the rate cuts come out on Wednesday, 236.10 is where the flip line is. If it goes below that, and then market makers step in and say, okay, we've had a positive report. Powell is saying there's lots more rate cuts coming. If it's below the gamma flip line, what that means is market makers will buy the rallies instead of selling the rallies. That means this could accelerate significantly higher if it goes down 3 more points by Wednesday. So that is the theory behind the gamma flip line. As far as what I've studied so far, again, I'm just beginning to study this and watch it. So on the options page for subscribers, I have a whole explanation of right here what the gamma flip line is and also what the current levels of that gamma flip line are right now. So it's going to be really interesting to watch what happens on Thursday. It could go either way. The market right now is very bullish. It is bucking the trend of September. September does not look like it's going to be a weak month at all. In fact, it's making new highs, which I think on the NASDAQ, that's never happened in September. The NASDAQ just made another new high. So we could see some interesting movements, and I think it's going to be very volatile between Wednesday and Friday, which is options expiration. So keep an eye on that. All right, that's it for now. That's what I think for the rest of the week. Let's go back and see what the. Okay, so look at that. We're now down to 239. The low is 238, but it's moving lower. That's really interesting. Keep an eye on that 236 level. Right now, that's right down here. 236 is where we were right back here, beginning of the week. Really interesting to watch what happens here. S&P pulling back a little bit, but not significantly. All right, that's it for today. Thanks for watching. Please like and subscribe. It really helps the channel. Even if you just like it or just drop me a comment, any kind of comment would be great. If you want me to take a look at any other stocks, I'd be happy to do that as well, or any topics. Tomorrow, I'm pretty busy all day. Probably will not have a Technical Tuesday tomorrow, but I will, if I get the report, I will do the Max Payne report at the midday update tomorrow morning, which will be a little earlier tomorrow. All right, thanks for watching, everyone, and have a great week. Talk to you later.